Hey guys, this is Martin from Secrets, the channel for learning about trading and investing. Welcome to Markets Tomorrow, the daily technical stock market analysis show where we quickly look at the charts and then try to understand what happened in the market during the day and plan for a better trade for the upcoming trading day. It's March 5th, Tuesday, tomorrow, 2024. So we had a very flat, indecisive day in the markets, right? But we made a new all-time high and we are on the way up. So here we have a quick market wrap up. You can take a screenshot if you want, but we would first look at the charts. Straight away to the charts. We would disable this. Look at this plain candles first and see what is it. We can hardly see the candle. It's a doji. A doji is a very small body with wicks on both sides. So doji indicates the indecisiveness in the market, right? And it's a doji at the very top. And there is a potential that there could be a tri-star pattern that can form if the market is intending to fall, which can be clear if you know if there is a downside move that happens below the today's candle's low. And it turns bearish means the end of the day you can have a bearish pattern that can be formed. But as of now, we did make a new all-time high, but indecisive candles are always simply indecisive, not right, with the potential for mostly bearishness. But one way we can understand that it is a pause after a big day, big bullish day. You can't have such big candles for 300 plus kind of moves that can happen every single day, right? So after such big buying that happens, there is a pause, which is what probably that might happen. Banknifty charts also, if you see, the candle is again indecisive because the body is less and the wicks are equal both. Sometimes this is known as a spinning top. Spinning top again is bearish in nature if it is confirmed that the price goes below the today's candle's low. Otherwise it's fine. And this is not exactly on the top. It should have been at the top at 48,600. Then it could have been more dangerous, but otherwise it's indecisive, just like the Nifty, right? But we can clearly see that it has moved up and gained more than 150 points today. While Nifty did not gain much, it is flat, 27 points gains nearly, after having made an all-time high. Now where exactly is the price? The price is on the way towards the top of the trend line channel. It has broken out from a consolidation that has been going on since several days with the Friday's move, and it is closed above all the exponential moving averages, right? All the exponential moving average, and it is clearly closed above the 22,400 also today. So bullishness is very much evident. What is Banknifty? Banknifty has climbed back into this blue channel once again after having slipped down that into the yellow channel multiple times and formed a W pattern and had slipped again from there, but recovered quickly on Friday, and now once again the W pattern, double bottom, is valid, which can go and easily make all-time highs and much beyond that as per the height of the W pattern. So that has become valid once again. Otherwise it's in the middle of a blue trend line channel and try to move above, but it is still on the edge of that consolidation box. You can't fully be sure until we take the 48,000, because 48,000 is a gap. So the gap starts from the 47,500 zone. So there are severe resistance there, you could see that, and there will be more treacherous constraints or resistance will be there until the gap is closed. Gaps are sometimes very powerful. So you would get a confirmation of this Banknifty moves towards the upside only when 48,000 is clear, where the window gap is created. It's a big rounding number as well as a gap. But price pattern wise, the higher low was created, and then now another higher high could be created, and then price action wise the lower low, lower high pattern is negated now, and it's in the higher high, higher low way on the way up. But there is a constraint very close by, just 500 points away. Something you have to keep in mind. That is all. Let's look at the resistance and the support levels from the charts. Nifty, see, of course, 22,441 is the first immediate resistance, which was the all-time high that was created today. After that, you would have 22,500, which is a big rounding number. Then, as we move ahead, there will be 22,700, 750 also, which could be our resistances because it's the top of the channel. So that's all we can do because it is uncharted territories at all-time highs. Downside, the first support would be at 22,400, which is the rounding number. Then 22,300, which is where the breakout happened actually from the consolidation. So that could now act as a support, and a change in priority bounce from here could also happen. After that, the 20 exponential moving average comes at 2234. So 22,000 is going to be a very beautiful support. If that is breached, then it goes back to 21,700, which is a 50 exponential moving average. That's how the support resistance for the next day. Bank Nifty, the first resistance of course would be 48,000 and 48,000. Yeah, we already discussed that. After that, 48,600, 48,500. These are all resistances because it's all-time high and rounding numbers. If this is downside, then 47,100, which is a 23.6 Fibonacci retracement support. Then you have the exponential moving 20 at 46,500 nearby. Then 46,300 is the 50 exponential moving average, and then 100 exponential moving average is at 45,600. In between the rounding numbers, 47,000 can be a good support with rounding number. Then similarly 46,000 also can be a very good support zone once the 50 and the 20 exponential moving averages are reached. So these are rounding numbers. So those are all exponential moving average supports, and in between we have Fibonacci support also. So that's the supports and that's the resistance on the bank. Let's now get into the wrap up. Most of the things here is already covered. So we have a close above the 22,400. That's a mistake there. Apologies. So Bank Nifty had a close, flat close, 0.12%, 27 points. Nifty, I mean, Bank Nifty also had a positive close, 150 points. Bank Nifty did little better, but otherwise it was flat on both the indices, but it gained, made all-time high on the Nifty, and it closed above the 22,400 and above the 47,400. It was a good move, good bullish move that has happened today. A small pause after a big breakout. Remember, we had 34,000 rally that has happened. The last leg itself is 20%. Bank Nifty had deeper cut of 8.5, by Nifty had only 4.5% of retracement. But Bank Nifty had a shorter retracement, only 26%. Shorter rally also. 26% rally only has happened from the previous to previous swing low. The Fyers data, if you see today, it was selling by the Fyers, but the big buying came in from the domestic institutions. It's a mutual fund, retail money that is coming in at the spot, another 3,500 crores. Fyers has been sellers since several weeks or more than 1 month now. And consistently, they have been selling crores. No cash is coming from the foreign institutions, except for a small pause or a small buying in between. It was domestic institution money that is coming. So this is a concern that the foreign money is lacking. Otherwise, market would have made the all-time high much before. Resistance support zones we have already seen. We are discussing that once again. Momentum has turned bullish today. Momentum has turned bullish today on both the indices on the short term. This is RSI 60. The trend also has crossed over to the bull zones on both indices on the daily charts, right? So that is very good thing. That is something that there was a disparity between the two indices, and that's our norm. Bank Nifty has joined. The VIX has stayed flat. Slight pull off is there, 0.5%, but that's nothing. So it's still on the edge near the 15, so we have to be cautious. Technically, charts today and Friday, Saturday today has gained the momentum and the trend, and has made the W pattern which got negated earlier valid in the Bank Nifty, and lower low price action has changed to higher high, higher low, that kind of pattern. And Bank Nifty has closed above the 20 exponential moving averages, right? And Nifty also has cleared that. And 48,000 is already hurdle that we discussed. There's a window gap resistance on the Bank Nifty, so that is cleared. Then it's only 1,000 points from here towards Bank Nifty making all-time. So Bank Nifty is making an all-time high, and if it is breaking out, that will be a big move that can happen. It can easily push the markets to the 23,000, just like that. So that is something. Whether that will happen immediately or it will take days or weeks or months, we don't know. But eventually, the market's direction has to be there. As of now, it has cleared the hurdles, and it is getting closer as the Bank Nifty has recovered to some extent. But the indecisive close of today and the window gap for the Bank Nifty is the only concerns. Right? Otherwise, another thing that we can notice that across the stock sector buying has not happened today. That's all sectors have closed red except for the pharma and the realty, which is called flattish green. The daily charts, if you see the auto, pharma, realty, metal, all of them are now bullish. So one more metal also has joined the bullishness in the short term. And FMCG and IT are the two sectors which are sideways, and no sectors which are in the bear sense of RSI less than 40. Now, heavyweights have closed green today except for the ICICI TCS and ITC, which is showing some red. Reliance and ICICI Bank now comes back as only two sectors which are maintaining the bullish momentum. All sectors are in sideways, and all the other stocks like Kodak Bank, ITC, and HDFC, which are on the bearish zones earlier previous week, has now climbed back to the sideways, which is also positive. But the buying today that has come in has not come in across sector. It has come in only in select big stocks, looks like heavyweight stocks. Now, US indices are green at all-time high at the very top, which is very positive. At the same time, it has to be seen with some caution because retracements would come in. It has been rallying just like our market since the inflation cooled off. Now, the dollar is showing some red. It's at 103.8, and rupee is slightly up, but it is at 82.3, being managed at the 83 level since very long. Crude oil was trying to move towards the top of the trend line channel towards the 80-85, but it is showing some red now at 79.34. The gold was breaking out and spiking up with solid bullish candles previous week. Today it is showing some flat red consolidation at the top, but remember it is hinging towards the all-time high. Gold price is shooting up across the world. Markets are at all-time highs, so probably people are hedging more into gold as they see some retracements that could come in any time. Is what you can understand probably. Right? Whenever the stock market rallies, or if there is possibility of some kind of retracements, usually gold could show up that in the charts. Not necessarily always, but usually. Every time there is a dip that comes, buying in SIP mode on quality stocks alone, for long-term investing purpose. And that's all that can be done at this stage. Momentum investing also can be done at this stage with tight stop losses. Now, for the trader perspective, what is required is momentum and the trend. It has come back. It has come back in both the indices for the short term, but not yet in the medium term. So, we'll have to wait a little more to get the confirmation of Bank Nifty clearing that 48,000 when the direction will be completely clear. And that is, you have to apply the strategies directional at that time. Till then, we can manage to have the directional strategies applied. Now, another thing is that the 50% difference between the realized volatility and the implied volatility and the realized volatility, that different spread has now turned in favor of the share of the option sellers, and also the option IV percentage is a very high 90, so that is also giving possibility of IV call off that can benefit the DK. That benefit can get the DK better way in the case of option sellers. So for positional players, primary, positional week, positional or weekly, monthly, whatever. Option non-directional players or option sellers primarily. Whatever be the thing, you have to play the tight stop losses if it is intraday and have hedge positions if it is carried forward. Risk is the only thing. Cut short position size if it is climbing above the 20 until then. Play safe. Risk is the only thing in your hands. Risk is all probabilities that may or may not work. Market can surprise, and black swan can come in and screw up all the technical studies. So always be aware that a risk manage, cutting short the position size, having tight stop losses, hedging strategies, these are all the things in our hands. And tomorrow is a weekly full Nifty expiry day, and full Nifty usually follows the Banknifty. Banknifty is verge of breaking out. Right? It is in the gap. There can be some congestion, making out of that. So study the charts of Banknifty and Nifty, which side by side when you are trading it on the expiry day. 20,500 is where the highest put writing is seen. 21,000 is where the highest call writing is seen. So resistance is going to be at 21,000. So it will be playing in between. So play the OTM, sell at these points, and then adjust if it is going outside of that. That's how expiry day plays usually happen. Position size is up as per capital risk appetite and volatility in the market, right? So put call ratio is also 1.414, which is bullish. So absolute bullishness is there, reflecting the Banknifty expiry. So be aware of that levels and then play it safe. That's all I have. If you're not subscribed, to subscribe and share to friends and colleagues. So thanks for watching. Happy trading, happy learning, happy investing. Bye bye.